alaikum. Welcome back to Green Valley Digital Classes. I am Aman and today we shall be discussing Chapter 4 of 11th class Business Studies syllabus, that is Business Services. As in the previous chapters, we have discussed Introduction to the Business, Forms of the Business, and then we discussed in the third chapter, that is different forms of public and private enterprises. But to discuss business services, we may have to go back to the first chapter wherein we discuss different types of industries. And when we classify the industries, we say there are primary industry, there are secondary industry, and then there is tertiary industry. And tertiary industry, we said they are helping industry. So what do we mean by helping industry? It involves all those industrial elements, all those activities which will allow secondary as well as primary industry to function smoothly. For example, we have banking, we have insurance, we have communication, and so on and so forth. Without these activities being there, secondary industry and primary industry may not function as smoothly as they can. Bank provides the finance. So both primary as well as secondary sector require finance so that they can procure different factors of production like raw material, like machinery, like labor and other things. Insurance. Both of these industries need protection because they have different types of assets, both fixed as well as current assets. Then communication. Without communication, primary industry may not be able to communicate to their suppliers. Secondary industry may not be able to communicate with primary industry and to customers. So all these activities are very much beneficial and very much helpful so that primary industry and secondary industry can function, can run their operations smoothly. So that is our focus now. So when we discuss business services, all we are trying to understand is the tertiary industry, or we can say auxiliaries to trade, because both have one important aspect. That means they are a help to both primary, secondary and to trade. So these are our primary activities which we perform so that we may help other industrial activities and other trading activities. So when we say business services are nothing but they are certain activities which are performed to assist the other industrial parts or activities. So simply we can say that business services are nothing but they are certain activities which are performed or which are produced so that we can help other industrial activities. This is just a simple definition of this. Now if we go into the technical part of this definition, we can say these are intangible, inventoryless, and produced in real time activities for helping other industrial elements and satisfaction of customer needs. So this is what we may define business services as. These are intangible, these are inventoryless, and these are produced in real time. Three most important aspects of business services. That first, they are intangible, second, they are inventoryless, and third, they are produced in real time. But why they are produced? They are produced so they may help other industrial elements and it is for the satisfaction of the customer needs. So when we describe business services, we have to take care of certain things. First, like we discussed, that they are intangible. When we say intangible, we simply mean that like this marker, it is tangible. We can touch it, we can see it, we can feel it. But because these are activities, they are intangible. They cannot be touched, They cannot be seen, they cannot be tasted, only they can be experienced. Like for example, when you go to a restaurant and you enter the restaurant, you order food, the food is given to you, you have a bill, the bill is provided to you, you pay the bill and then you leave. So where is the service? You don't see it. The service is the activity of providing you the menu, taking the order, providing you the food, and then taking the bill from you, and then other things which follow. So you may see the food, you may see the tables, but they are not services. That is called physical evidence. And without physical evidence, service cannot be rendered, service cannot be performed, service cannot be produced. So all you see are people, tables, platters, cutlery and everything else. But it is the activities which they perform, that is what we call as service. So first part is that it is intangible. Second, it is inventoryless. It's a logical thing to say. Whatever is intangible, which has no physical evidence, which has no physical existence, cannot be stored. It is inventoryless. So inventoryless means it cannot be stored. And the third thing is produced in real time. When we say produced in real time, as we are demanding it, so the producers are being produced and simultaneously are being consumed. What do we mean by that? When you go to a simple barber shop, you ask him to trim your hair. So he cuts your hair, he trims your hair. So he produced it in the real time as you demanded it and you consumed it while he was producing it. You never say that keep this in store, I will come tomorrow. Or you keep my hair cut, I will come after 2 days. That is not possible because it is inventoryless. As it's produced in real time, the moment you demand it, the moment it is delivered, simultaneously the consumer consumes the service. Then we say inconsistent. Inconsistent, what we mean is that service for two people may not be the same. For example, when you go to a doctor, somebody goes for a headache, somebody goes for back pain. So the service which the doctor offers is totally different based on the need of the customer. A person with a headache may require a simple paracetamol or simple tablet and that is it. While as somebody having back pain or somebody having, God forbid, hypertension or some heart problem, he may require totally different service. He may require blood checking, he may require blood pressure monitoring, he may require other aspects. So two different people, the same doctor, provided two different services. So there is inconsistency. While as in product, if these two products are produced, you will see the consistency. They resemble each other. They are same in every which way. The dimensions, the size, the height, everything. So products have consistency, while as services have inconsistency. And we can say production and consumption simultaneously. Why? Because they are produced in real time. When you produce the services, you cannot store it, so they are consumed simultaneously. You go to a doctor, you ask him for the prescription, he provides the prescription, and while he is providing the prescription, you are consuming it, you are using it. So it cannot be stored. If it could have been stored, we may use it in future. But because it cannot be stored, it is inventoryless, it is intangible, so the production and consumption are simultaneous. And the last thing that we have to remember is customer as part of production. Supposedly, you visit an ATM. It's a service provided by the bank. So when you visit an ATM, it is a service provided, but it cannot be completed until and unless the customer is there. You put in your card, you enter your PIN, and you withdraw cash. So that service is completed when the producer is part of that service. So when the producer is there, he allows or he completes the service by completing other half of it. While as the bank has already given you the service, but it is incomplete. Who will complete it? When customer will go in, he will punch in the pin, he will put in his card, and then he will withdraw the money. So these are the things through which we can define business services. So again, we can say that these are intangible, inventoryless, produced in real time, inconsistent activities. Again, I am stressing on the fact that they are activities which are performed, which are produced so that it may satisfy the needs of the customers and allow primary, secondary, and trading activities to be performed smoothly. Now, when we say different types of services that we have to discuss in this very particular chapter, first one that we have to discuss is banking. Very important and very much crucial service that is provided. And before describing what banking is, we should see or we should understand what bank is. So, a bank is a link between saver and borrower. Saver is the one who will save his money or who will deposit his money. And he will deposit the money into the bank. And borrower is the one who borrows from the bank, or bank lends him money. So saver deposits the money into the bank and borrower borrows money from the bank. So the bank acts as a link between saver and between the borrower. So what is a bank then? Simply, it's an institution which accepts deposits and lends credit. This is the simple and most comprehensive definition of the bank. So the bank is an institution which accepts deposits from the savers and lends credit to the borrowers, or we can also say it lends money to the borrowers. So as per Banking Companies Act, they define bank as business of accepting deposits for the purpose of lending or investments. This is the one part of this definition, that banking or a bank is a business of accepting deposits. Again, the same thing is repeated, that it is into accepting deposits for the purpose of lending or investments. So those deposits which are made to the bank by the saver, they will be put forth to the borrowers as a form of credit or as a form of investment. So the money available to the bank because of the saver has two purposes. Either it can be lent to any person as a loan, or it can be invested. And money repayable on demand, either through check, draft, or order. So, second part of this definition is that the money which the saver has saved into the bank, he can withdraw it on demand whenever he requires it. And the withdrawal can be either through check, which we all use, draft, which we call demand draft, and order, which we used to call money orders. So this money which has been saved into the bank, it can be withdrawn by the saver because it is his money. He has deposited it. It is not the money of bank. Bank is only allowing it to be lent, to be invested. But again, it is the property of the saver. He will withdraw it whenever he feels fit to withdraw it, as we do. Sometimes we have to purchase something, we go to an ATM, we withdraw some cash. Sometimes we have to make online transactions. We go onto the website of the respected bank, we transfer the money. So it is withdrawable on demand whenever you require it, and they have to provide it to you. They cannot say, no, we don't have the money because we have given it to the borrower. No. So they have the money with them that you can withdraw at any given point in time. So now coming back to banking. So if bank is an institution, what do we mean by banking? So banking are the activities performed of accepting deposits and lending credit. So the activities which are performed by the bank, they are termed as banking. So like we have bank is an institution. The activities within this bank is called banking. Like we have school. School is an institution, but the activities performed within the school will be termed as schooling. Curricular activities, co-curricular activities, other activities which we perform in school for the satisfaction of the students. Same way, if a bank is an institution which accepts deposits and lends credit, banking says, performing these activities, this is what banking is. So the bank performs the activities of lending. Bank performs the activities of borrowing. That is how you define the bank. And bank is defined by its properties. Bank is defined primarily by its two functions. An institution which accepts deposits. An institution which lends its credit. So you can define bank by its functions. So now if we have come to the functions, so let's discuss some of the functions of the bank. As far as the functions of the bank is considered, we can divide the functions into two: primary functions and secondary functions. Primary functions, they are the basic functions of the bank. Like we discussed in the definition also, it is two: accepting deposits and second one, lending credit. So these are the two primary functions or the basic functions of the bank, that it accepts deposits from the savers and it lends credit to the borrowers. As far as secondary functions are considered, first, accepting checks, promissory notes, and bills of exchange. So check, we know it's an instrument which is used to withdraw money, which is used to transfer money from one person to another. Second, promissory note and bills of exchange. These are securities, short-term securities, which are used when there are credit exchanges between buyer and the seller. So when we draw a bill of exchange, it is in the name of a certain bank, and when we go to the bank to withdraw the money, we have to deposit that promissory note and it will provide us the required money that is available to us through that bill of exchange. Second is buying and selling of securities, like shares and debentures. So bank is also another having function of buying and selling of securities like shares. So bank may either purchase some shares of some other companies, or it may sell the shares which it already has, or it may act as an interlink between one investor who would like to purchase shares or one seller who would like to sell his securities. So bank, other than these two functions, is also helping us to purchase and sell shares. Then third, issuing letter of credit. This inshallah we shall discuss in the penultimate chapter of this syllabus, that is internal trade and external trade, wherein we will discuss what letter of credit means. This time we will just simply discuss it, that if there is importer and exporter, importer has to purchase and exporter has to sell. So exporter knows nothing of importer because they are living in two separate countries. So how come exporter will have confidence on importer that he will pay whatever amount he is required to pay? So for that, the bank issues letter of credit in favor of importer so that exporter may have faith in importer, and these credit sales can be facilitated. So exporter gets confidence on importer because of the letter of credit, wherein the bank assures the exporter that this importer has the required amount of money in our bank account, and we shall act as a link and a guarantee for the payment of any products that he may purchase or import from you. And in case of any discrepancy, the bank shall be liable to pay to the exporter. So this gives confidence to the exporter and the international trade is facilitated. Then locker facilities. Again, you may have seen that banks have safety deposit boxes where you may put in your valuables, some important papers, some jewelry, some important things which you cannot keep at home. So again, it provides us safety locker facilities. Then issuing of traveler's check. Because many people would like to visit different countries and it's not possible for them to carry cash, for them to carry money in their pockets. So bank provides them traveler's check, which is useful to withdraw any type of currency in any part of the world. It doesn't require to go to a specified branch or specified bank where it needs to withdraw. It's a traveler's check. Let's say for example, if Indian bank gives a traveler's check to any person, he may go to any part of the world and withdraw money using that traveler's check. And it is also for foreign exchange. So bank provides us also foreign exchange. Supposedly, after a few months, the Hajj pilgrimage will start and people will require the currency of Saudi Arabia to have it within themselves for some purchases, some exchange in Saudi Arabia because rupee does not work there. So we go to the bank, we ask them for Saudi Riyal, we exchange our currency with the currency of Saudi Arabia. So bank is the one who will allow us that exchange. We can convert our currency into some other foreign currency. So these are some of the functions that the bank has, and primary and secondary. First, this is the main focus of the bank, that accepting deposits and lending credit. And these are other secondary functions which bank performs on regular basis. Now coming to the types of the banks. When we say types of the bank, we have to discuss 4 types of banks. First one is commercial bank. Commercial banks, these are normal banks which will charge some rate of interest on the lendings and accept deposits from the savers. So there is nothing special about this bank. It will perform the activities which is supposed to perform, that accepting deposits and lending credit. So commercial bank, why is it commercial? Because its motive is mere profit and commercial benefit. And we can have commercial bank as private and public. Like we have distinguished what is private, what is public in the previous chapter, this time we will not discuss it. Just give an example that private bank is HDFC, ICICI, Axis Bank and others. While as in public, we have State Bank of India. A classic example of public commercial bank, which will accept deposits and which will lend credit. Second type of bank is central bank. Very important bank as far as economic development and economic conditions of a country is considered. In previous chapter we discussed a statutory corporation, and when we discussed RBI, and RBI is a central bank. So central bank is not a usual bank which will accept deposits from people and which will lend credit to people. No, it's a supervisory bank. And it acts as a supervisor for both public as well as private banks. And it will form the policies, the guidelines, and other things which will govern the entire banking system of the country. Yes, central bank is called bankers' bank because all the commercial banks, all the cooperative banks, or any different types of banks in the country, they can deposit their surplus money into this central bank. And it's also called government's bank. So if government also has to keep its money reserves into some bank, so it can deposit its money into the central bank. But central bank is not usual like commercial bank. It will allow credit, it will accept deposits from common people. No, it is only accepting deposits either from the government or from the other banks. It will lend credit either to the government or to other banks. So that way it's unique, and most unique feature is that it is a supervisory bank. It is for the public and private banks so that it can control, it can supervise all the activities that are going within the country. So central bank is a supervisory. It creates policies, it creates guidelines, it creates rules and regulations for other banks, and most important thing, it will decide the interest rates for other banks, for savings as well as credit. Then we have the third, that is cooperative banks. As also we have discussed in the second chapter, what are the cooperative societies? These are the voluntary associations that have been created for the benefit of the members. So when we say cooperative banks, they are actually credit cooperative societies. So they are created for providing credit at very low interest rates to the members and to the general public. So you may have in Kashmir J&K State Cooperative Bank. So it's a cooperative society. It's a credit cooperative society specifically created for providing credit at very low rates of interest to the members and to the society. And like commercial bank, these cooperative banks are also under the supervision of the central bank. Then the fourth one is specialized bank. Specialized banks are the special banks which have been created for a specific purpose to specific industry. For example, we have IDBI, Industrial Development Bank of India. It was created for providing loans, for providing credits to small entrepreneurs so they can establish micro, small, medium and cottage industries. So simply the main purpose or the sole purpose of this bank is a specialized feature, specialized function, that it will provide credit, but not to common people for their consumption, no, for the industrial development so that they can establish their industrial units. Then we have NABARD, National Bank of Agricultural and Rural Development. Again, a specialized bank. It was created for agricultural and rural development. So it is not created for urban areas, no, it is created for rural areas where agriculture can be helped, where industrial development can be helped, and it will provide credit to farmers, it will provide credit to small industrial enterprises, entrepreneurs, so that they can develop these rural areas. So you have commercial bank, you have central bank, you have cooperative bank, and then you have specialized bank. These are the four types of banks that we have to understand. So this finishes up the first type of services, that is banking. The second type of service that we have to discuss is insurance. As we deal or have heard this term time and again in our daily lives, when we purchase a car, we get it insured. We have our house, we get it insured. But what is the purpose of insurance? The main purpose is to reduce the risk or to dissipate the risk among others. So what do we mean by this reduction of risk and dissipating of risk or distribution of risk among others? Simply, if there are 10 people who have taken up insurance and everybody is depositing money with the insurance company, and God forbid, out of these people, 3 suffered damages. So they will be compensated for the loss. So these 3 people, after having suffered damages, their 7 people will compensate their loss, or their loss will be compensated from the deposits that they have made. So the loss these 3 people have suffered was distributed among all other people who have deposited their deposits within the insurance company. So that is what we mean by dissipation of risk or the distribution of risk to others. So insurance is an instrument which will distribute the loss of one to others. So it's not my risk now, wholly and solely. It is collective risk of all other people who have deposited money into the insurance company. So this was just a layman or the just general idea of what insurance is. But if we get a bit technical about this insurance, insurance primarily is a contract between insurer and insured for indemnifying the loss in consideration of the premium paid annually or otherwise. So there are different parts that we have to understand. First, it's a contract. So any time or any given type of insurance will always be a contract. And we know for contract there has to be 2 parties. And in this case there are also 2 parties. One is insurer and one other one is insured. Insurer is the one who will offer the contract, who will offer to secure the risk, who will offer to compensate the loss. And insured is the one who will accept this contract, who will take up the insurance and who will try to minimize his loss, his risk of damages. So it's a contract between insurer and insured for indemnifying the loss. Probably the most important word used in this definition is to indemnify the loss. When we say in simpler terms, we can say compensate the loss. Whatever the loss, whatever the damages have occurred, the insurer will compensate the loss, will indemnify him. But it is not for free. In consideration of the premium. So when we say in consideration, we can say in return of an amount called premium. So the insured has to pay some consideration for insurer to provide that insurance cover, to provide that insurance contract. So this consideration, if not there, this contract will not be complete and insurer may not provide the binding contract to the insured. So consideration of something in the form of premium, and premium we say is simply monetary consideration. Something we pay in terms of money, and that is paid either annually or otherwise. It can be biannually, it can be half yearly or something. So again we will repeat that insurance is a contract between insurer and insured for indemnifying the loss. So again, the purpose of insurance is to indemnify the loss, to compensate the damages in consideration, in return, where insured gives something to the insurer, and that something is called premium. Otherwise, why would insurer provide him some protection if he is not getting something from the insured? So there is a consideration, and it can be either annually or any other time period that has been set. So a few terms that we have to understand as far as we have to discuss insurance. First one is insurer. When we say insurer, we said again that it is the firm which offers the insurance policy and accepts to pay the loss. So insurer is the firm or the party which will offer the insurance policy, which will offer the contract to the other party and telling him that I will take up your risk, I will indemnify your loss, I will compensate your damages. Second is insured. Insured is the one who will accept this policy, who will take up this policy. To protect himself from the risk. So whatever may be the risk, so insurer provides you the contract, and anyone who will provide the contract of indemnity, it becomes insurer. And one who accepts the contract and tells the insurer that yes, I would like to take up the policy so that I am protected from the risk, so that becomes insured. So if you buy a car and you go to LIC or National Insurance or All India Insurance, so you go there and you tell them I would like to take up insurance for my car. So they will provide you the protection, they are the insurer. You will accept the policy for your car, you are insured. And then premium. It is the amount that insured pays to insurer for taking up the insurance policy. So without this premium, this policy will not stand to be accepted. Then we have insurance policy. It's a contract, like we said, between two parties. So what does contract have? It has terms and conditions. When can this insurance be ratified? What is the amount that they will pay? What is the amount of compensation that will pay? When this insurance will be expired? When it can be converted? So on and so forth. So all the conditions that this contract has will be in the form of insurance policy. And this insurance policy is offered by the insurer and accepted by insured. And the premium is paid by insured to the insured. Then we have insurable amount. When we say insurable amount, it is the total value of the insurance policy, or we can say the maximum amount of damages which can be paid. So insurable amount will tell us what is the total value of the policy, or up to what limit the insurer will compensate the damages. And then we have compensation. So compensation is paid for the amount of damages that have occurred. A simple example will serve that, for example, a car insurance is purchased and the car insurance is worth rupees 5 lakh. So the total value of the policy or the insurable amount that insured has taken up is 5 lakh. So the insurer will compensate the damages up to the maximum limit of 5 lakh. But let's suppose after 2 to 3 years, the car suffered a damage of 1 lakh. Its bumper got busted, its headlight got busted. So the damages are 1 lakh. So you don't require whole 5 lakh. All you require is 1 lakh so that you may replace the bumper and the headlight of the car. So this is insurable amount. But the damages are up to 1 lakh. So they will compensate. And this 1 lakh shall become the compensation of the insurance policy for the damages. So these were all the different parts of the insurance that we have to understand. So again, we may repeat it that it's a contract between insurer and insured to indemnify the loss. So now we can tweak the definition a bit. So we can say it is a contract of indemnity. And what do we mean by indemnity? That we will discuss inshallah in the principles of insurance, where we will discuss all the principles including what do we mean by indemnity. And this shall be all for today. Inshallah, I will see you in the next lecture where we shall discuss the principles and different types of insurance. Till then, have a good day. Fi amanillah.